Tesla, it is a leader in, a lot of the conversation right now is really this software-based AI, and it should be about that because ChatGPT is the fastest application to 100 million users. But I think AI applied to the physical world is something that's almost overlooked, and we think it's a massive opportunity for Tesla. And you mentioned full self-driving being one of those, powering an autonomous robo-taxi network, and we think that opportunity is so big. That's why Tesla is a top name across many of our funds. And I think they're, experts in vertical integration. We've seen that in the chip in the car and now the chip in the data center, and how they're reworking their entire factories to try and reinvent the manufacturing process, and using AI not just to come up with those efficiencies, but also for the robots that are in their factories. And we see Amazon deploying more and more robots in their warehouses as well.
In today's video, we're setting our sights on Tesla, the groundbreaking automotive powerhouse that's been redefining the electric vehicle space. We're going to take a comprehensive look at the key factors that can propel Tesla's growth this year and evaluate the likelihood of these outcomes. Despite only a modest 20% growth in stock price in May, we believe that Tesla's got the potential here to surge a further 20% in June. Once a Tesla bear predicted the company's stock could plummet as low as $24.33 amidst a catastrophic recession. Yet, Tesla has actually proved its mettle by not only weathering the industry challenges of recent months, but also by pushing its stock value beyond the $200 threshold. This achievement underscores a simple truth. Tesla is not your ordinary car maker. The company operates with a vision and strategy distinct from any other player in the global market. In addition to our analysis, we're also bringing you some insights and predictions from leading investment authorities, offering their perspectives on Tesla's future trajectory. If you're keen to stay informed about the unfolding narrative of this industry-leading company, then keep watching this video until the end. You're not going to want to miss a moment. But before we delve into our discussion, let's take a look at what analysts have been saying about Tesla recently.
So if you take a look at the way that it stacks up to those guys, what exactly then does that say about the future for Tesla versus a GM or a Ford or a Volkswagen who have grand EV ambitions of their own?
I think all of the OEMs, the major manufacturers, are actually doing pretty well. And we can talk about a 62, we can talk about 69, 65, where a lot of the major manufacturers are congregating ratings-wise. And those are low-risk ratings. Over 90% of companies that have failed in the last 20 years have been rated 40 and below. So the companies that are rated 60 are actually really quite strong. What Tesla has that others don't is the ability to experiment with things like pricing, and you're seeing that now. And that's a way to capture market share at a time when many people are afraid to buy new cars because they've become so expensive. So you've got a perfect storm in autos, like a lot of other industries, where you've got high inflation, you've got recessionary concerns, you've got the move to EV, which can provide even more costs and embed more costs, and you've got supply chain challenges. So all of those kind of wrap together, and Tesla's in good shape.
Tesla shares recently rallied to their highest price since early this year, and Elon Musk's net worth, which was battered badly by his controversial purchase of leadership on Twitter, recently became the largest in the world. One of the reasons why Tesla was able to be a tricky, trendy stock is because of its tendency to break all of the rules established by traditional automakers, whether by solely offering electric vehicles, forsaking the dealer network model, using a non-union workforce, or not advertising. Tesla has disrupted the auto industry. Several forecasts assume the EV maker will generate hefty billions in revenue that year, and the majority of this will be coming from electric vehicle sales and, of course, the robo-taxi business. Hey everyone, and welcome back to Tesla Tomorrow. Several companies like ARK Invest have laid out numerous price targets for Tesla shares when factoring in robo-taxis and full self-driving. Remarkably, ARK Invest says using autonomous taxis could cost as little as 25 cents per mile, which means they have the potential to replace 60% of short-haul flights based on affordability. That's a big opportunity for Tesla, which has approximately 2.7 million cars on the road collecting data to feed its self-driving models right now, and about 10 times more than its closest competitor. Surprisingly, the latest model from ARK Invest takes out robotaxis and full self-driving and still settles on a price target of $500 by the year 2026. Tesla's stock price reaching $200 this year has actually seemed rather impossible, but the stock has successfully crossed this milestone and it's on its way to rally up to 20% and is going as high as $250 in June. What are the possibilities for this? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Elon Musk's valuation assumes Tesla will reach $50 to $60 billion in annual car sales. As Tesla's self-driving technology continues to improve, those vehicles will become self-driving robotaxis, allowing usage to go from 12 hours a week to 60 hours a week. Tesla could charge additional fees for those robotaxis, allowing the company to generate much more car revenue, and basically it would be like bringing software economics to the manufacturing-intensive car business. In 2022, Musk said that the dedicated robotaxi will be highly optimized for autonomy, meaning it won't have a steering wheel or pedals. According to him, the robotaxi could be a very powerful product and will probably reach volume production in 2024. Musk further said that this vehicle will be a massive driver of Tesla's growth. Musk has been hinting at robotaxis for years, but not through a standalone product. Instead, he has repeatedly promised to turn the Tesla vehicles that people own today into their own robotaxi via the full self-driving software. Several Tesla investors have the belief that any Tesla vehicles on the road with FSD capabilities will have the potential to generate $20,000 in revenue per year by transporting people without human assistance. For instance, ARK Invest is betting autonomous ride-hailing will create $14 trillion in value as soon as 2027, with $4 trillion in annual revenue across the industry. Elon Musk is also counting on full self-driving and other new technologies and vehicles at Tesla to provide the wow factor that will continue to drive the electric car maker's value beyond its automotive trials. In 10 years from now, full autonomy will likely be required as a standalone feature for all automakers, which would render FSD subscriptions a moot topic. The good news for Tesla is that between now and 2031, FSD subscriptions can move the financial needle for the company. Deepwater Asset Management, an American-based investment company, predicts that over the next decade, booked operating profit from FSD upfront and subscriptions will increase from $600 million in 2021 to $102 billion in 2032. This implies that 20% of annual buyers purchase FSD upfront and 3% of the remaining eligible vehicles subscribe. As features are added over the next 5 years, the firm believes that those numbers will increase to 31% and 15% respectively, climbing 45% and 34% in 10 years. That means in 2031, about 80% of Tesla's vehicles on the road will have SSD, and full autonomy will be a required feature to sell cars globally. However, while these predictions seem too good to be true, there are a few things to keep in mind here. Some analysts and investors still worry that Tesla's industry-leading market valuation is threatened by factors including price cuts that have undermined its margins, delays in rolling out newer models and revisions to its FSD software. According to David Traynor, CEO of investment research firm New Constructs, Tesla faces an increasingly uphill battle to secure its competitive position, which makes its current valuation look even more unrealistic. He added that the Tesla bull case has centered around the company's growth goals, which it sometimes does fail to meet. Likewise, although the robotaxi is expected to bring a massive turnaround in Tesla's valuation, it may be some time before Tesla drivers are able to use their cars as robotaxis. However, on a long-term basis, staying positive on Tesla remains the best decision that investors can make. While the future is uncertain, it is best to remain hopeful. How much do you think Tesla stock's going to be worth by the end of June? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.